Well, let's bring on board our guest for today. Siddarth Bhamre of Religare Broking is joining in. Good morning, Siddarth. Good to have you on the show. Before I come to your Diwali picks, I want to ask you about the markets. This Samvat has been pretty volatile for the markets. When you look at S&P 500 globally, in fact, markets have taken a sharp knock. S&P 500 is down somewhere around 25% for the year. But if you look at the Indian markets, they are just about down somewhere around 4% or so. So would it be safe to say that we've decoupled from the global markets? And how do you expect the markets to pan out in the new Samvat?
Good morning, Nandita. Thank you for inviting me on your show. So yes, I think this is extensively discussed since last couple of months that how we have been decoupled, at least from stock market performance, if not, economy at large. And, the prime reason for this, Nandita, is the domestic consumption story. And earlier, the domestic consumption story was not about India, it was also about China. And there used to be, accordingly fund allocation by foreigners. But China is suffering through its own problem, be it, slowdown or crash in housing space over there. And even, COVID-related protocols are still being followed. So that leaves India as, a spot of oasis in middle of desert where, globally there are so many challenges. And that's the reason there has been, outperformance in market. Even if you look at macro numbers perspective where world is struggling to stay in positive zone, India is still growing at 7%. The negative aspects which people want to highlight is that no, it won't grow at 7%, it will grow at 6.9 or 6.8%. But look at the growth. And we are not any, a mid-sized economy. We are fifth largest, which clearly suggests that, no fund would ignore us. And that's the reason you are seeing that despite so much of mayhem in markets, we are not seeing an aggressive selling by FIs, which we saw in month of October, November, December. And we are seeing this kind of outperformance. Also, from shorter term perspective, I want to highlight that a lot of people are talking about there are too many shorts in system and that's negative. See, shorts can be speculative in nature or they can be hedges. And our take at Religare is that these shorts are not speculative shorts because world is going through problem and there can be any, a knee-jerk reaction. And that is the reason most of the institutions have hedged their portfolios in India rather than selling it out. So don't think this as negative. And we are quite optimistic on market. Dips may come because of volatility, because of external factors, and those dips should be bought.
Buy on dip is the strategy according to Siddarth. But Sid, what are the chances of the markets hitting a new high in the new Samvat?
Well, that's anybody's call. Our take, Nandita, is that probably, Nifty can hit around 19,000 levels in next 1 year. That obviously, is above all-time high. But then from 17,500, 600, stating 19,000 is not a very big target, right? I'm talking of less than 10% upside over here. Because globally, other economies are struggling. Even if we hold on to our grounds, plus minus, 5-6% here and there, I think that would be a great performance look on the backdrop of what is happening. So yes, new high may not be a big challenge, but if someone is anticipating that you would get 20-30% return in stock markets, at least on the index level in coming 1 year, I think that would be a bit challenging.
Right. Coming to your Diwali picks, Siddarth, I can see you have quite a few large cap names like Asian Paints, HCL Technologies, Maruti Suzuki, Ultratech Cement, United Spirits. And among the mid caps, you have Dalmia Bharat, Kansai Nerolac, as well as NAM India. But let's talk about your large cap picks in the particular. HCL Technologies is one of the stocks that you have recommended as your Diwali pick. Given the fact that we have seen quite a bit of drubbing coming in for IT stocks, what is the rationale behind your picking this stock as your Diwali pick?
Yeah, so you're right, Nandita. If you look from beginning of this year, calendar year, IT space has significantly underperformed. And reasons for that is that there was a lot of attrition which was happening. The cost of employment was going higher. And people were talking about slowdown in US. So, and the stocks had become expensive as well. Stocks which were quoting at 20-25 times multiple were trading at 30-35 times multiple. And those were their peak valuation in recent past. Now, what we have seen because of this correction from month of January 2022, till end of September, which is where we took call, Nandita, that probably the underperformance of IT might be getting over, which was more of statistical call, and it is turning out quite well. Uh, so we are not negative on IT. We believe that the underperformance which IT has shown in last 1 year, that is behind us. At best, it can be a market performer or it would outperform market. And why we are thinking so? Firstly, though people like us may not be so very optimistic. When I say people like us, I'm talking about market participants, about IT space. But if you look at the commentary of each and every management, it was very positive. They are talking about growth coming from North America, where people are talking about recessionary fears. So you can understand that people sitting in cabins can have great opinion about the slowdown in US and recession in US, but people who are actually doing business are quite optimistic. So this fear of a big recession, I think, is overplayed, and we believe that the growth in IT space would continue. The attrition, which was acting as a negative factor last 8-10 months or probably more than a year now, will now start acting positive, because most of the company management are suggesting that the attrition are at peak level, and from here they can go only one way, which is down, and which would be margin positive. Also, if you look at some of the top managements of IT companies, mentioned that the falling rupee has aided to their margins. So what we are anticipating is steady revenue growth, but expansion in margin, which would lead a slight re-rating of these stocks which have corrected. Coming to SCL Tech numbers, at FY24 earning of 14 to 15 times, this stock is quite attractive valuation perspective. Historically, it trades at discount to Infosys and TCS, but I think we can expect a PE of around 18-19 going forward, which ensures that we get 30% upside from current levels, and that's the reason SL Tech is a buy.
Right, outlook looking buoyant for these tech firms that have been beaten black and blue. That's according to Sid. So moving on to your mid-cap pick, one of the picks that I can see is NAM India. What is the outlook, or what is the rationale behind picking this one?
And the mutual fund sahi hai, and that that's the theme, and I understand that very well. What has happened in mutual fund space, Navya, that direct selling is increasing. Though AUMs of companies are going higher, we are not seeing revenues moving higher. But at the same time, in last 3 years, what these companies have done is they've cut down on their expenditures, and that's the reason you are seeing, despite decent rise in AUM, you're not seeing rise in revenue, but there is rise in profitability. So we are reaching an inflection point where you would start seeing incremental rise in revenue with rise in AUM, because the margins in these companies are coming down. And especially if I have to talk about NAM India, why we are liking it, it has a market share of 7.4%, and that market share is growing. And that market share can only grow if there is performance in your scheme. If you look at these schemes of NAM India, at least in three spaces where a lot of AUM concentration is there, they are among the top performers, and they are attracting a lot of portfolio investors. Their concentration this time is more on ETF, which may have less margin, but at the same time has less management cost also. So we are seeing a decent traction happening in the space. Stock has corrected, hasn't been a big underperformer, Nandita, and at 265, 270 levels, we feel that the margin of safety in NAM India is very high, and we would suggest to buy. We do have aggressive target price, but as of now, we are anticipating that it can move towards this 330, 340 odd levels, which can give you a neat 30% plus.
Well, indeed, mutual funds sahi hai, and of course, domestic investors have been pumping in money even as FIIs have been withdrawing. Thanks a lot for joining us this morning, Sid. Wish you and your team a very happy Diwali.
Thank you so much, and wish your entire team and you happy Diwali as well, Nandita. Thank you.
Thank you. Let's move on.